Welcome to the Live Wealthy Podcast with Dawn, where we are growing our wealth and our worth at the same time. You ready? Let's go. Welcome to the Live Wealthy Podcast. My name is Dawn. I'm a certified financial advisor, a behavioral financial advisor, and the CEO of a multi-million-dollar wealth advisory firm called WELLthy Financial Group. And this topic today could be costing you thousands, if not hundreds of thousands of dollars over your lifetime. And this topic in this episode is for people that have investable assets, either in the stock or bond market, and have not received a second opinion from their advisor. You see, you could have a financial advisor that isn't giving you comprehensive financial advice. So if your advisor is just managing your investments, but not addressing critical tax strategies, not addressing estate planning, not addressing the risk that you have in your portfolio, you could be missing out on major financial opportunities. So what I want to address with you today is really break down the top 5 issues that I see with individuals coming into our investment firm and becoming new clients, and what I've seen from their previous relationship with their advisors and these missed opportunities because their advisor is just managing their investments. Okay, so what are these 5 major missed opportunities? Well, first of all, the first 2 come down to tax planning, this critical tax planning that I see so many times is missed with advisors not giving this comprehensive financial advice. So what do I mean? Well, the first one comes down to your investment tax planning. So if you are not working with an advisor that's not tied in with a CPA and that they're doing work together, giving you financial advice and investment tax advice at the same time, you're probably missing out on thousands, if not, like I said, hundreds of thousands of dollars. And it significantly impacts your portfolio because the goal is with investments in the stock and bond market. It's yes, the goal is to grow your investments, but the ultimate goal is what? Is to keep more of that growth. I have people all the time say, my advisor did really well financially for me. I got a really good rate of return. But what I always ask, what is your real net rate of return on your investments? Your after-tax rate of return on your investments. It's not just about that top line, whatever rate of return, 12%, 14%, 30%. What are you keeping in your portfolio? So let me ask you this question. Is your current advisor looking at investing your money in tax-efficient accounts? Is your financial advisor taking advantage of a strategy called tax loss harvesting, where you are netting your gains from one of your investments so you don't have to pay taxes on the gain? Or when you have an investment that is down and the timing of selling that investment so you can claim that investment as a loss on your taxes. So then you get a tax break. Is your advisor taking advantage of tax loss harvesting? Is your advisor being really efficient about the balance of your investment? So you have some of your money in taxable accounts, some of your money in tax deferred accounts, some of your money in tax free accounts. Do you know what your balance is and how much money you have in each of those 3 different accounts so you can minimize the taxation on your investments? Is your advisor taking advantage of Roth conversion strategies and the timing of those Roth conversion strategies. And when you take advantage of these Roth conversion strategies, when you're in a low tax bracket environment, how it can save you thousands, if not hundreds of thousands of dollars over the course of your lifetime. And if you don't know the answer to these questions, I need you to rethink your financial strategy, because it's not just about managing the investments to get the maximum performance, but it's about managing the investments to get and keep that real net rate of return in your pocket so you can actually have more to live on today and plan for tomorrow. What about your income tax strategies? Is your advisor giving you advice around your income tax? Like, how do you leverage your tax deduction from an income perspective? If you are an entrepreneur or a small business owner, like, how do you leverage the taxation and how do you leverage and minimize the taxation on your income? Like, should you be filing your taxes as an S corp even though you have an LLC? Should you be taking advantage of the Augusta rule or hiring your kids in your business? Should you open up a health savings account to save thousands of dollars on your medical, like on your medical insurance, like in your income tax? Like, do you qualify even for a health savings account so you can have that and save thousands of dollars on your tax return? Like, do you have a retirement plan that you are utilizing to save money from a taxation perspective? What about, let's say both of you and your spouse have 1099 income, or let's say just you as a spouse are a income earner and you have a small business and you earn either K1 or 1099 income, but you could hire your spouse and take some of that income and put it in, but his or her name. And yes, do you have to pay some self-employment tax, which is FICA tax? Yes, but by taking some of that income and putting it in your spouse's name, could you also then take significant income tax deductions as well? Like, are you taking advantage of this? Is your advisor giving this holistic income tax advice? Because this could make 5 to 6 figure a difference in your investment and income tax portfolio and how you pay your taxes. The third issue I see is estate planning issues, like beneficiary planning. Like, have you named a beneficiary? Many times we think this is simple, like name a beneficiary on your account. But I have had a client come to me, or an individual that became a client, who has an 8-figure investment portfolio, and their past advisor just forgot to put a beneficiary on their account. Can you imagine what would happen if you didn't have a beneficiary on your account? That account would have to go through probate court system, which the court then, after you pass away, the court then names a beneficiary on who gets to receive that money. And when you hire the court to do this for you, it's a lengthy process and a very expensive process. You guys, this is someone who is paying their advisor tens of thousands of dollars a year, and there wasn't a beneficiary named on one of their accounts. And then what if you have named a beneficiary on your account, but your advisor is not giving you advice around like how to name the proper beneficiaries, having the right beneficiaries on the right investment accounts? What do you mean, Dawn? Well, here's what I mean. Let's say you're someone that like 80% of your or 90% of your estate, your investments, your real estate, your stocks, your bonds are going to your family. and your children. And let's say maybe 20% of them are going to go to charity. And so you take every account that you have and you name your accounts 90% to family, 10% to charity. And you do that on every account. Well, guess what? Your accounts, some of them are taxable, some of them are non-taxable accounts. And what happens is that I see all the time people naming charity on their tax-free accounts. But instead, if they would name their children on their tax-free accounts, that means their children or their family members receive money tax-free. And if you name a charity on your taxable accounts, there's a rule out there that says charities don't have to pay taxes when they receive taxable inherited money. When they receive taxable gifts from people like you and me, they don't have to pay taxes on it. So instead of naming your every account that you have an equal 80-20 breakdown or a 90% breakdown, you got to be smart. Like, is your advisor working with you to name the right accounts, putting the right beneficiaries on the right accounts? It's so significantly important. Is your financial advisor having this spending plan with you? Let's say you're getting close to retirement or you're in retirement and you're spending down your assets. Well, what assets are you spending down? Are you spending down your taxable assets, your tax deferred assets, or your tax-free assets? Like, what's the plan for spend down? Because that can significantly impact the taxes that you pay and or that your children or that your heirs or that the charity would or would not pay. What's that spend down plan? It's significant. This estate plan is it's such an important part of your planning as a human being and as someone that has money. And is your advisor looking at this type of estate planning? And if they're not connected to, like, I get it. An estate planner is someone who actually fills out the documents, right? To make sure we have the legal documents in place. But a financial advisor is strategizing the taxation and the intent of the money. Because again, the right type of financial advisor that's giving you comprehensive advice is looking at not just like how to manage your investments, but what is the optimal way to leverage your entire estate. The goal is not just to grow. Hear me out on this. The goal is not just to grow your investments, but to keep your investments intact for as long as you possibly can. The fourth issue that I see is people that come in to me and want a second opinion, and they haven't had a financial planning discussion with their advisor for years. A financial planning discussion. You guys, a financial planning discussion comes down to making really good decisions around your wealth. It's all how to maximize your wealth is all in the decisions that you make on a day-to-day, year-to-year basis. The right working with an advisor is not just about wealth accumulation, not just about helping you accumulate your wealth, but that advisor should help you optimize, hear me out on that, optimize your wealth so you can actually live and enjoy your wealth both today and in the future. It's about optimizing and not restricting your life with your money. So how do we optimize our wealth? Well, we do that through a financial plan. Are we oversaving or undersaving? Are we overspending or underspending? We don't want to be in a position of restricting our wealth, because when we restrict our wealth, basically based on fear, we're restricting our life opportunities. You have to have a comprehensive plan. You have to have re-engage in this financial plan on a regular basis, because you know what? It goes back to the decisions you make with your plan today impact your taxation today, impacts your taxation for tomorrow. And that's how you waste thousands, if not tens of thousands and hundreds of thousands of dollars. The final issue I see with individuals coming into my firm and becoming clients is the risk that they have on their portfolio, their investments. So many times people have no clue how much risk they're taking on in their portfolio. What is your portfolio needs to be adjusted from a risk perspective on a regular basis. You guys, the stock market, it's constantly volatile, right? And sometimes the volatility is small, sometimes the volatility is large, but the markets are always in fluctuation and changing, which means the risk on your portfolio, your investments change as well. So how much risk are you taking on in your portfolio? And are you having a regular conversation with your advisor about that risk? And how we measure risk is based on what we call your target asset allocation. So what is your target? How much risk, how many assets do you have in the stock market? How many assets do you have in the bond market? How many assets do you have in real estate? What is the proper alignment or balance based on that? Stock market is super risky. How much stock you have is going to determine how much risk you're taking on in your portfolio. And that risk, again, needs to be adjusted on a regular basis because of these market fluctuations. This risk needs to be adjusted based on us just getting older. The older we get, the less aggressive, the less risk we can take on in our portfolio because we need to use that portfolio for income. Has your advisor done a stress test on your portfolio? What's a stress test? It's what is in worst case market conditions. And yes, we experience worst case market conditions more than you realize. What is that stress test? What is a 98% probability your portfolio will not lose more than X amount of money? You need to have your portfolio stress tested. So when the negative market conditions come, and they will, you need to know probability from a probability statistical standpoint, how much risk can you emotionally handle? Is that conversation happening with your current advisor? This is so vitally important. Again, because it's not necessarily just how much money we make, it's how much money we keep. So do not settle for a half financial plan. Do not settle on just working with someone that's just managing your assets, because they don't know without a financial plan how much you should be investing, how much risk you should be taking on. They don't know what is the best way to optimize your estate so you can optimize the opportunities you have for money for the people that you value most in your life, your family. What about the tax strategies around your income and your investment? Is that advisor giving you holistic advice so you make really good, sound financial decisions? If not, I'm here to give you a complimentary second opinion. I'm a fiduciary. I can't just tell you your advisor is not giving you the right advice. I have to give you honest, direct, objective feedback on your investments. I can't even bring you on as a client if I can't put you in a better position. That's what a fiduciary advisor does. If this resonates with you, if you are interested in a second opinion and want somebody that will just give you some advice on what you're doing right maybe some room for opportunity so you can put more money and keep more money back in your pocket so you have it in your pocket so you can fully live your life. Click the link below because that link will give you a financial assessment on where you're at. It'll allow me to look at that and find out where you're at and where there might be some opportunities for growth. Click the link below and I'll see you on the other side.